Hi, I'm Scott Williamson, Managing Director of Blackstone Minerals. We're looking to restart the Ta Khoa Nickel Sulphide Project in northern Vietnam. We're looking to produce downstream products for the lithium-ion battery industry. As I said, we have a district-scale nickel sulphide opportunity in northern Vietnam. The previous owners sunk $136 million into the capital infrastructure. We're looking to restart that mine, but the previous owners left behind 25 targets for nickel sulphide. So we're systematically testing those targets. We believe we have a district scale, or most likely a world-class nickel sulphide district. We're looking to produce a downstream product for the lithium-ion battery. This downstream refining business is scalable and modular, and we've got a significant amount of demand coming from the lithium-ion battery industry, and we're confident that we can scale up into that demand that's coming. You can see here the major players in this Class 1 nickel space, and a lot of these groups are focused on other metals. We believe we have an opportunity to be a major player in the top 5 of this Class 1 nickel producers. You can see there's 1.5 million tonnes per annum required for the lithium-ion battery movement over the next 5 to 10 years. And that's a significant amount compared to the largest players being Norilsk, who only produce less than 250,000 tonnes per annum. So we need some major new producers in this space, and we believe that we can be one of those. It's driven by this movement towards a high nickel cathode. The original lithium-ion battery had a ratio of nickel, cobalt to manganese of 1:1, and there's a movement towards an 8:1 ratio, so 8 times nickel to 1 times cobalt and manganese, and that'll be the dominant chemistry mix by 2030, and that is the product we're looking to produce from our downstream business. The nickel, cobalt, manganese 8:1 precursor is the ultimate product from our downstream refining business in northern Vietnam. You can see very well located in this northern Vietnam region, on the doorstep of the major players in the industry, being South Korea, Japan and China. Most of these groups we have been in discussions with for many years, and we believe that the funding for our project will come from these major players in the lithium-ion battery space. They have a significant demand for nickel, and particularly in these chemical products we're looking to produce from our downstream business. We're looking to produce a green nickel product, and to do that, we're using the hydroelectric renewable power sources in this northern Vietnam region of Son La. We're looking at a pressure oxidation flow sheet, which is better suited and tailored to these chemical products, but also is a cleaner and greener, lower emissions process. We're looking at electric mining equipment at the open pit and underground mine level. We're looking at a vertically integrated value chain, which allows us to reduce and remove the need for transport and the carbon that comes with transporting products and concentrates, and a corporate commitment to highest levels of ESG compliance. Well funded, we've just recently raised $60 million. Our current cash position post-raise will be in the order of $70 million. So well funded for the next phase of piloting and studies. We have an institutional following of around 42%. We have some strategic investors, including EcoPro. They're the largest cathode manufacturer in the world. Board and management still have a strong position of 9%, and then the remainder of around 40% of retail investors and private high net worths. You can see the board structure there. We've got Mr. Jung as the representative from EcoPro. Miss Alison Gaines, recently addition. She's a corporate governance expert, and and we're very focused on diversity and of skill sets, particularly at the board level, and we're moving towards a majority independent board as well. My background's in mining engineering and capital markets, and Hamish and Andrew also have strong capital markets and geological expertise. We have a lot of good analyst coverage. The price targets range from between $1 and $1.90, so plenty of value in the stock at the current levels of around 60 cents. This is the business. So we have the upstream business unit where we own 90% of the Ta Khoa Nickel Sulphide project. We have a partnership with Trafigura as a feedstock source and partner into our downstream business. That's where we're looking to bring in the downstream partners, most likely from the lithium-ion battery industry. Those partners can either be cathode or battery manufacturers, or even car manufacturers. So we have an opportunity to bring in multiple partners at the downstream business level. The downstream converts nickel concentrate from our mine, the Ta Khoa Nickel Project, and other third-party mines from around the world. We will be sourcing nickel concentrate from areas like Australia, Canada, South America, and Africa, feeding that into our downstream business and supplementing our feed from our Ta Khoa Nickel Sulphide project. You can see that we are moving through the first two stages of the lithium-ion battery, which is the mine to concentrate, and from the concentrate into the precursor NCM 811 product. We'll have MHP as an intermediate product, and this is, as I said, very scalable and a modular approach. We can scale this up as long as we find increased feedstock supplies from other third-party providers, including our relationship with Trafigura. At the mine level, this is our upstream business. We're drilling out our first 5 ore bodies, and we're in that resource delineation phase, moving into the pre-feasibility study over the next coming weeks, and then moving into the definitive feasibility study phase in the new year, looking to restart the existing concentrator. We're looking to build a second concentrator. So we have 2 types of ore bodies: large-scale disseminated open pit mines. They will need a second concentrator. We're looking at building a 6 to 8 million tonne per annum second concentrator for those large ore bodies. Our mines or our upstream business will then feed nickel concentrate into our downstream business in 2024. This is the nickel sulphide district. We believe this could be a world-class system. We've got 25 targets of massive sulphide outcropping at surface. The first 5 targets are looking like they are going to be mines. We have, looks like, a couple of open pit mines and a few underground mines. So very well positioned and having very good success with the drill bit through this world-class nickel sulphide district. This is our first ore body. This is a large-scale bulk open pit mining disseminated ore body, around 280,000 tonnes of nickel in this first ore body. It's a bowl-shaped intrusion. The open pit mine will mine almost all of this intrusion, very low strip ratios, bulk tonnage, open pit mining scenario for the first 8 to 10 years of this project. This is one of our high-grade massive sulphide underground narrow vein opportunities. You can see the grades up to 1 to 2% nickel, around 1% copper, and 1 grams per tonne in the platinum plus palladium plus gold. So have very strong byproduct credits in the massive sulphides. There's also a disseminated halo, which allows you to bulk the underground mining out into larger widths. This is one of our first underground mines at Ban Phuc, and a maiden resource coming in the next few weeks. This is another one of our high-grade massive sulphide underground mines at King Snake, and also looking for a maiden resource in the coming weeks. We're working with the Vietnamese government on a collaboration to look at this new Chim Van target. You can see it's around 10 kilometres away from our large-scale Ban Phuc open pit mining opportunity. There's around 280,000 tonnes of nickel at Ban Phuc, and that's the baseload feed for the first 10 years of operations. That Chim Van target is 15 times the size of Ban Phuc, and a very exciting opportunity where we're in collaboration with the Vietnamese government to explore for this asset, and then look to bring that into our exploration tenement over the coming months. So you can see our downstream refinery, we have those large-scale disseminated nickel sulphide open pit opportunities. We also have these high-grade massive sulphide narrow vein underground mines. We have the Trafigura top-up feed, the largest nickel trading group in the world, as our partner, and to feed increased amounts into the downstream business. We also we're looking to third-party feed through joint ventures and mergers and acquisitions, and we see that as a massive opportunity. There's a lot of nickel concentrate in the market, and we're very confident we will fill this downstream refining business with nickel concentrate from around the world. The downstream business highlights from the recent pre-feasibility study. If we use the conservative pricing for a 20% premium for the NCM 811 product, which drives a $2 billion NPV and very strong IRR of 67%. Capital intensity or pre-production capex is only $491 million. If we use today's pricing and premium, which is around 40%, so an NCM 811 premium of 40% drives a $3.5 billion NPV at today's pricing, and for the same capex of $491 million. So very strong return on invested capital through this downstream business. Very well located in this northern Vietnam region, looking to build in this area out to the west of Hanoi. Well located with two of the largest hydroelectric power plants in Southeast Asia, the Hoa Binh and Son La Hydro. So that will drive 100% renewable power into this downstream business. We're close to the rail infrastructure that goes down to the port city of Haiphong, where the electric vehicle group called VinFast is currently about to sell their first electric vehicles, rolling off the factory floor as we speak, and very well positioned with VinFast down at the port city of Haiphong. They're looking at a $60 billion IPO on the NASDAQ, very well positioned with that large Vin Group conglomerate. A local conglomerate called Vin Group is the major partner of the VinFast electric vehicle company, so well positioned in this northern Vietnam region. So in that downstream business, we're effectively purchasing nickel concentrate from our mine at third-party arm's length, as well as bringing in the third-party concentrate, and we pay around 75% for nickel concentrate, which is a 25% discount to the LME nickel price. We convert that into the NCM 811 product in our downstream business. That product trades at a 20 to 40% premium to the LME nickel price. So we're effectively doubling the value of the nickel by combining it with cobalt and manganese in the ratio of 811. We're doing that through a pressure oxidation process. So you can see this is a tried and tested technology. This technology has been used in the mining industry since the 1960s. So there's nothing novel about this process. It's all off-the-shelf equipment, solvent extraction as well. We're looking to produce that NCM 811 product. We have byproducts of kieserite, which is a fertilizer, green fertilizer product. We'll also produce copper and a green copper cathode. The leach residue will have the precious metals report to that. So the platinum group elements will report to the leach residue. We're looking at doing further leaching to extract those precious metals, particularly the platinum group elements, the full suite, including elements like rhodium, iridium, and osmium. At the oxygen plant, we're looking at potentially replacing that oxygen plant with an electrolyzer, which will allow us to produce green hydrogen as a byproduct. Just on the economics, so as I said, today's prices, it's around a $3.5 billion NPV. So the economics are driven by that premium for the NCM 811 product and the payability for the nickel concentrate. So the nickel concentrate being the input and the main input into the downstream business, and then the premium that is currently around 40% for the NCM 811 product, which is driving a very strong $3.5 billion NPV. Just on that premium, it has traded between 20 and 40%. For our base case, we use 20%, and that at the base case, it's a $2.2 billion NPV. This is data from the Shanghai metal market. So there is a spot price for the NCM 811 on the metal.com Shanghai metal market. And you can see there strong premiums for this product, we think, going forward because of the demand from the lithium-ion battery industry. Because of those strong premiums, and you combine with the hydroelectric power, very low power costs and low labour costs, we have a very strong margin, which allows us to potentially pay a little bit extra for our concentrate. So if we were to pay 5 or 10% above the market rate, we can still drive strong NPVs at today's prices in the order of $3 billion. We are now moving into the downstream definitive feasibility study and pilot plant phase. Our recent capital raising was for our second phase of pilot plant, which will be built in Vietnam in the new year. We have an ongoing pilot plant phase happening in ALS in Perth, and we've engaged the Wood Group as our consulting engineering firm to complete the definitive feasibility study by the end of the financial year in June 30. And at that point, we'll be looking at offtakes and joint ventures with the downstream players and the final investment decision, moving into the build phase in late 2022 into 2023 and producing NCM precursor product in 2024. Thank you for your time and look forward to meeting you through the platform.